ExamPrep.School. Virginia Health Insurance Exam, exam code SERIES 11-6. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Dental insurance, disability income and related insurance, federal tax considerations, general insurance, group health insurance basics, individual and group policy provisions and mandated benefits, individual health policy, general provisions, insurance regulation, insurance for senior citizens and special needs, managed care and eligibility rules, Virginia, market conduct, advertising, replacement, and suitability, Medicare supplement and long-term care standards. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Which of the following scenarios best exemplifies a pure risk in the context of health insurance? A. Investing in a healthcare company's stock with potential for financial gain or loss. B. A policyholder purchasing supplemental coverage hoping for a cash payout. C. A beneficiary incurring medical expenses after an unexpected injury. D. Speculating on fluctuations in health savings account interest rates. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is C. The correct answer involves only the possibility of loss, medical expenses due to injury, without any opportunity for gain, which defines a pure risk in health insurance. Reason A is not correct. This option involves both possible gain and loss, characteristic of speculative risk rather than pure risk. Reason B is not correct. Hoping for a payout introduces speculative elements, disqualifying it as a pure risk. Reason D is not correct. Speculating on interest rate changes entails potential gains, making it a speculative risk. Question 2. Which of the following examples represents an indirect loss in a medical expense claim? A. Reimbursement for physician-prescribed rehabilitation treatments. B. Coverage of diagnostic imaging fees incurred during emergency treatment. C. Compensation for lodging expenses incurred by a caregiver near the hospital. D. Payment of inpatient hospitalization charges for surgical procedures. The correct answer is C. The correct answer covers ancillary costs associated with treatment rather than direct medical services, which defines an indirect loss in medical expense claims. Reason A is not correct. This option covers a direct medical service, classifying it as a direct loss. Reason B is not correct. Diagnostic imaging fees are direct medical expenses, not indirect losses. Reason D is not correct. Hospitalization charges constitute direct medical costs, not indirect coverage. Question 3. Which of the following represents a moral hazard in this scenario? A. Living on a floodplain that experiences periodic seasonal inundation. B. Overgrown vegetation near the home, increasing potential fire intensity. C. Neglecting regular testing and maintenance of smoke detectors in the dwelling. D. Exaggerating past water damage claims to secure a larger payout. The correct answer is D. This option involves intentional misrepresentation of losses for financial gain, exemplifying a moral hazard, while the other options describe physical or morale hazards. Reason A is not correct. This is a physical hazard because it is an inherent environmental risk, not related to dishonesty or careless behavior. Reason B is not correct. This describes a physical hazard because it is an environmental condition that increases risk rather than a behavioral attitude. Reason C is not correct. This reflects a morale hazard since it involves a careless attitude towards safety maintenance. Question 4. Which of the following best describes a mutual health insurance company? A. Owned by policyholders who share in company surplus. B. Owned by investors who purchase its publicly traded stock. C. Generates capital through sale of common shares to the public. D. Operates exclusively by selling non-participating policies. The correct answer is A. Mutual insurers are structured so that policyholders collectively own the company and receive dividends from any surplus rather than external shareholders. Reason B is not correct. Describes a stock insurer owned by external shareholders, not policyholders. Reason C is not correct. Refers to capital formation of stock insurers via public offerings, not mutuals. Reason D is not correct. Non-participating policies are typical of stock insurers rather than mutuals. Question 5. An agent explains the structure of the Knights of Health, a fraternal benefit society offering health coverage, to a prospective member. The member asks how the Knights of Health's treatment of earnings differs from a stock insurer's distribution of profits. Which statement correctly describes this difference? A. Earnings are returned to policyholders as dividends proportional to premiums paid. B. Surplus is used to enhance member benefits and lodge operations. C. Excess earnings are paid out to stockholders based on share performance. D. All profits are retained to increase the insurer's loss reserves. The correct answer is B. The correct answer is that fraternal benefit societies use surplus to enhance member benefits and lodge operations. Unlike stock insurers that distribute earnings to shareholders, fraternal benefit societies reinvest earnings in member services and lodge functions. Reason A is not correct. That describes how a mutual insurer returns dividends to policyholders, not how a fraternal society allocates surplus for lodge purposes. Reason C is not correct. Paying excess earnings to stockholders applies to stock insurers and does not reflect the member-focused surplus use of fraternal societies. Reason D is not correct. Retaining all profits for reserves describes a stock insurer's risk strategy, whereas fraternal societies actively allocate surplus to member benefits. Question 6. Which most accurately defines an insurance producer's apparent authority? A. Authority specifically delineated in the agency agreement. B. Authority that a third party reasonably assumes the producer has based on the insurer's representations. C. Authority implied as necessary for carrying out the producer's express obligations. D. Authority conferred by law to perform duties beyond the express terms. The correct answer is B. The correct answer is the concept where third parties rely on representations made by the insurer about the producer's powers, which defines apparent authority. Express authority is set out in the agreement. Implied authority is necessary to carry out express terms, and inherent authority is granted by law beyond those terms. Reason A is not correct. This describes express authority, which is the power specifically granted in writing. Reason C is not correct. This describes implied authority, which is not expressly stated, but necessary to fulfill express duties. Reason D is not correct. This refers to inherent authority, a legal concept beyond express and implied scope. Question 7. Under fiduciary duty principles applicable to insurance producers, how must premium funds be handled? A. Segregate premiums in a premium trust account until transmission to the insurer. B. Commingle with general business funds if forwarded to the insurer within 30 days. C. Apply toward legitimate office expenses when cash shortages occur. D. Invest in short-term interest-bearing instruments for the insurer's benefit. The correct answer is A. The correct answer is that premium funds must be kept separate in a premium trust account until they are remitted to the insurer, reflecting the producer's fiduciary duty. Commingling, using premiums for expenses, or investing them violate that duty. Reason B is not correct. Allowing commingling even with a delayed remittance breaches the duty to separate client funds. Reason C is not correct. Using premiums for office expenses violates the obligation to hold funds in trust. Reason D is not correct. Investing collected premiums for interest benefits misuses fiduciary premiums. Question 8. Under an accident-only health insurance policy, coverage is triggered exclusively by which of the following events? A. Accidental bodily injury resulting in medical treatment. B. Sustaining a specified disease listed in the policy. C. Admission for illness-related hospitalization. D. Routine preventive health examination. The correct answer is A. The policy provides benefits only when an accidental bodily injury occurs and requires medical treatment. It does not cover sickness or routine exams. Reason B is not correct. This policy type does not cover sickness or specified diseases. Reason C is not correct. Hospitalization for illness is excluded under accident-only policies. Reason D is not correct. Preventive exams are not covered by accident-only policies. Question 9. Which feature is characteristic of a specified disease health policy but generally not a feature of a critical illness policy? A. A predefined list of covered illnesses with specified benefit amounts. B. Payment of a fixed lump sum upon diagnosis of major conditions. C. Benefit amounts based on incurred medical expenses. D. Coverage renewal guaranteed until a stated age. The correct answer is A. Specified disease policies limit coverage to a defined list of illnesses with set benefit amounts. Critical illness policies often cover broader conditions without a fixed disease list. Reason B is not correct. Lump sum diagnosis payments are common to both policy types. Reason C is not correct. Neither policy typically bases benefits on actual expenses. Reason D is not correct. Guaranteed renewal is unrelated to the specified disease feature. Question 10. A hospital indemnity fixed benefit policy is best described by which of these structures? A. Reimbursement of actual hospital expenses up to policy limits. B. Coverage only for room and board charges for a specified period. C. Daily cash benefit paid regardless of actual hospital charges. D. Lump sum payment triggered by extended hospital stay. The correct answer is C. Hospital indemnity fixed benefit policies pay a predetermined daily cash amount regardless of actual charges, rather than reimbursing actual costs or paying lump sums. Reason A is not correct. Yes, that describes a reimbursement policy, not fixed benefit. Reason B is not correct. Coverage is not limited to room and board under this structure. Reason D is not correct. Benefits are not lump sums but fixed daily amounts. Question 11. A member enrolled in a limited benefit dental plan and a limited benefit vision plan receives a $200 dental prophylaxis service and is reimbursed $50 based on the dental plan's fee schedule. The same member then purchases eyeglass lenses and frames totaling $230, of which the vision plan pays $100. Which cost control mechanism is the vision plan applying? A. Benefit schedule that sets fixed reimbursement amounts by service. B. Coinsurance requiring the enrollee to pay a portion of each covered expense. C. Plan deductible that must be satisfied before any benefits are paid. D. Fixed dollar allowance applied toward the purchase of specified materials. The correct answer is D. The vision plan applied a predetermined dollar allowance toward frames and lenses, which is characteristic of an allowance mechanism rather than a fee schedule, coinsurance, or deductible structure. Reason A is not correct. A benefit schedule defines set reimbursement amounts by service type, which describes the dental plan rather than the vision plan's approach. Reason B is not correct. Coinsurance would involve a percentage cost share, but the scenario shows a set dollar payment rather than a percentage of charges. Reason C is not correct. A deductible requires paying expenses up to a set threshold before coverage begins, but the scenario reflects a set benefit amount without any threshold requirement. Question 12. On a health insurance application, what is the purpose of the producer's signature in the section, often called the producer's report? A. To authorize the release of the applicant's confidential medical records. B. To verify the agent has reviewed the application for completeness and accuracy. C. To guarantee the underwriting decision of the insurer. D. To acknowledge the insurer's receipt of the initial premium payment. The correct answer is B. The producer's signature in the producer's report section certifies that the agent has reviewed all applicant responses for accuracy and completeness before submission, whereas the other actions are not functions of the producer's signature. Reason A is not correct. The signature does not serve as authorization to release medical records. That requires a separate consent form. Reason C is not correct. The agent's signature does not bind underwriting decisions. Those are made by the insurer's underwriters. Reason D is not correct. Receipt of premium payment is acknowledged elsewhere and not by the producer's signature in this section. Question 13. Which statement best describes the proper use of Medical Information Bureau reports in underwriting health insurance applications? A. They ensure applicants who have smoked in the past are automatically classified as smokers. B. They provide definitive evidence for automatic policy issuance without further investigation. C. They serve as adjunct sources but cannot be the sole basis for an underwriting decision. D. They are used to verify financial information such as income and assets. The correct answer is C. Medical Information Bureau reports are used as alert tools to reveal potential adverse medical history, but underwriting must include its own independent investigation rather than relying solely on MIB data. Reason A is not correct. Smoking history is tracked through the application questions and medical exams, not automatically classified by MIB. Reason B is not correct. MIB data are not conclusive and must be supplemented, not used for automatic issuance. Reason D is not correct. MIB collects medical and health history data, not financial information. Question 14. A health insurance producer secures a HIPAA authorization from an applicant on October 1st to release protected health information, PHI. On October 15th, the applicant revokes the authorization in writing. Under HIPAA rules, how may the insurer use and disclose the applicant's PHI after October 15th? A. Stop all uses and disclosures of PHI upon receiving the revocation, although the insurer may retain the PHI for record-keeping purposes. B. Continue using and disclosing the PHI for payment and operations only if a claim is actively being processed in reliance on the original authorization. C. Disregard the written revocation for 60 days and continue uses and disclosures until the originally specified expiration date. D. Cease disclosing PHI to third parties but continue using it internally for treatment, payment, and healthcare operations as permitted by HIPAA. The correct answer is D. The correct answer is that the insurer must stop disclosing PHI to third parties upon revocation, but may continue internal uses for treatment, payment, and operations. HIPAA revocation is effective when received, but permitted uses and disclosures under other HIPAA rules are not affected by the authorization revocation. Reason A is not correct. This is incorrect because although record-keeping retention is allowed, stopping all internal uses for payment and operations exceeds HIPAA revocation requirements. Reason B is not correct. This is incorrect because payment and operations uses are permitted under HIPAA, regardless of reliance on the original authorization. Reason C is not correct. This is incorrect because a HIPAA authorization revocation is effective immediately upon receipt, with no 60-day grace period. Question 15. Regarding the war exclusion provision in a standard individual health insurance policy, Which statement is accurate? A. Only injuries sustained during a formally declared war are excluded. B. Injuries sustained in any war, declared or undeclared, are excluded. C. Injuries during military training exercises are excluded only abroad. D. Injuries from civil insurrections are covered under standard benefits. The correct answer is B. The war exclusion bars coverage for injuries resulting from any war activity, whether formally declared or not, excluding warlike acts such as insurrection and rebellion. Reason A is not correct. The war exclusion applies to injuries from both declared and undeclared wars, not only formally declared conflicts. Reason C is not correct. Military training injuries are not classified as war-related acts and thus are not excluded under the war provision. Reason D is not correct. Civil insurrections are considered warlike actions and are excluded by the war provision. Question 16. After visiting an out-of-network specialist who charges $500 for a procedure, an insured submits the claim to a health plan with a $200 deductible and 20% coinsurance on usual, customary, and reasonable UCR charges. If the insurer's UCR limit for that procedure is $350, how much will the insurer pay? A. $280. B. $120. C. $400. D. $80. The correct answer is B. The insurer first applies the $200 deductible to the UCR amount of $350, leaving $150 eligible for coverage. Then, at 80% coinsurance, the plan pays 0.8 multiplied by $150 equals $120. Reason A is not correct. Calculates 80% of the UCR without subtracting the deductible, resulting in an inflated payment. Reason C is not correct. Calculates 80% of the provider's full charge rather than the UCR limit. Reason D is not correct. Calculates 20% of the UCR amount instead of the 80% that the insurer covers after the deductible. Question 17. Under the entire contract and policy changes clause of an individual health insurance policy, which of the following is permissible? A. A producer may amend policy benefits if the insured pays an additional premium at the time of change. B. Verbal agreements between the insured and an agent can modify coverage if documented in the underwriting file. C. The claims department may adjust policy provisions at claim adjudication without a written endorsement. D. Only an executive officer of the insurer may authorize amendments to the policy's terms. The correct answer is D. The entire contract and policy changes clause specifies that only designated officers of the insurer may modify policy provisions in writing. Agents or departments cannot unilaterally alter terms. Reason A is not correct. Producers have no authority to amend policy terms even if additional premium is paid. Reason B is not correct. Verbal agreements are invalid. Changes must be in writing by an officer. Reason C is not correct. The claims department cannot adjust policy provisions without a formal written endorsement. Question 18. According to the time limit on certain defenses provision in a typical individual health policy, after what period following policy issuance may an insurer no longer contest non-fraudulent misstatements made in the application? A. 12 months. B. 36 months. C. 48 months. D. 24 months. The correct answer is D. The incontestability provision bars contesting non-fraudulent application statements after 2 years from issuance, while fraudulent misstatements remain contestable. Reason A is not correct. A 12-month period is shorter than the standard 2-year contestability period. Reason B is not correct. A 3-year period exceeds the statutory time limit for contesting non-fraudulent statements. Reason C is not correct. Contestability does not extend to 4 years under the standard provision. Question 19. Under the grace period provision in a standard individual health policy, how many days constitute the grace period for a policy requiring monthly premium payments? A. 10 days. B. 21 days. C. 7 days. D. 31 days. The correct answer is A. According to NAIC model regulations, the grace period for monthly premium modes is 10 days, whereas weekly modes have a 7-day period and other modes have a 31-day period. Reason B is not correct. A 21-day period is not prescribed under standard premium modes. Reason C is not correct. 7 days applies only to weekly premium payment modes. Reason D is not correct. A 31-day period applies to quarterly, semi-annual, and annual modes, not monthly. Question 20. Under the reinstatement provision of an individual health policy, coverage for losses due to sickness begins how long after the date of a reinstatement application? A. Immediately. B. 30 days. C. 45 days. D. 10 days. The correct answer is D. The reinstatement provision specifies that sickness-related coverage resumes 10 days after the reinstatement application date, while accident losses are covered immediately. Reason A is not correct. Immediate coverage applies only to accident losses, not sickness. Reason B is not correct. A 30-day delay is not stipulated under the reinstatement provision for sickness coverage. Reason C is not correct. The 45-day period refers to the insurer's approval timeline, not the sickness coverage start. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below. We read them all. Find full practice exam books in the description or at ExamPrep.School.